Hello, good morning and welcome to another weekly outlook video. So we start off as we do with on the dollar index on Friday, the previous trading day. If you were attending the live stream from that day, you would remember that I wanted to see if we could trade above or at least to the equilibrium of the month, the opening price of the month, because anything above there might take us lower, and we did exactly that. We traded above the EQ, filled up this daily fair value gap, and rejecting lower from there now. So many people are expecting lower prices from here because of this reaction, including myself. But if you were there, you would also remember, if you're there on the live stream, you'd also remember that I wanted to see the 20 days high rated, well, basically the current month's high rated one more time before we continue lower. I did not want to see this reaction. I wanted to see a move that maybe something like this before we get the shift and re-entry to be bearish the rest of the month. I already said that my main target is that sell side liquidity, which is the yearly fair value gap. If you go back to my previous few weekly outlook videos, you'd know that I am bearish on the dollar index short term before we continue higher the rest of the year, which is my prediction and what I would like to see happen. But I did not like this reaction. Either way, we will be able to work around this, because if we want to quickly see where we reacted from, it wasn't just only the closing of this daily fair value gap. On the hourly chart, you would also realize that we reacted from this volume imbalance residing at that level on Wednesday during the high impact news event at that point. So price traded to it, traded to this bearish order block, then reacted lower from there. So now many people would like to see the dollar continue lower, probably using this hourly fair value gap at this point, then expecting lower prices from here, targeting that sell side liquidity. For me, I decided that I would just pretend that Friday never happened. I know that sounds a bit subjective, but I would like to see if my invalidation is essentially this order block. Before NFP data results came out, I was looking at this hourly order block. That was my first thing. The second thing I was looking at was this swing low that was made during the London session. If I'm bullish on the dollar, I would like to obviously see a low taken, and if the low from London session is taken, I would expect to be bullish from there. So this was a nice move to the upside, but I wanted to see us invalidate this volume imbalance, because I wanted to see a closure above this volume imbalance, so that any retracement down back to the opening price, the EQ line, this blue line here, any retracement to it would mean higher prices. But we can see prices traded lower and closed all this inefficiency as if NFP never really happened. So I didn't like this move. It basically came back to where we opened up in the day, which made Friday's candle to be a small body candle. So personally, I'll still be using this bullish order block as my invalidation point. I would still like to see this order block hold, and I would like to see a continuation higher, because we have relative equal highs residing there. If you notice, we have relative equal highs there, and of course we have the current month's high. So I'm still bullish on the dollar. I'll still like to see these highs taken. But if this order block gets invalidated, if we close below this order block, then I might now consider being bearish. I might now consider waiting for a retracement higher to take it lower, only if and when this 1 hour bullish order block gets invalidated. If it doesn't and continues trading higher, then I would like to see a continuation to the upside, going through that buy side liquidity and the one up there. So I'm still bullish on the dollar index, and the reason why I'm still bullish is based on the interest rate. Why I'm not convinced yet that we are in fact bullish is because of the interest rate. So here we see the 10-year yield, the 30 and the 30. This is supposed to actually be the 5 years. So let's fix that now. Looking at the 5, 10 and 30, we can see that we got a range from the swing low there to the swing high into this PDRA. It's this volume imbalance on all three of them. Of course, the 30 years was a bit more bearish, so we traded deeper into the volume imbalance there. Then we got a rejection higher, creating a range high. I measured the range from the swing low to the swing high, and I saw that we respected the 50% of all of them. So here we got a 50% respect, trading higher, 50% respect, trading higher. And I wanted to see a continuation higher. Higher to what point? Well, that's when we look at the ZB chart, which is I believe the treasury bonds. On the treasury bonds, looking at this weekly time frame, we see that price is trading back down into short-term discount as well, because it's moving opposite of what the interest rates are doing. So we see that interest rates are pushing higher. I would expect ZB to be trading lower into this short-term discount. So I wanted to see this discount tag before we can continue higher. At the same time, I want to see this guy, the interest rates, trade higher before we can continue lower. So if I looked at these three charts, we can clearly see that we've been bullish, and knowing that these charts are supposed to be following the dollar index, it sort of makes me wonder why the dollar isn't following the trend. Because notice the time we traded lower, these ones were also trading lower, and of course we can see they were all trading lower, lower, and lower. And now that we're trading higher, we can see an expansion after tapping into these fair value gaps. Higher, fair value gap, higher, fair value gap, and higher. Why is the dollar index not following that? We traded higher, then we rejected lower after NFP. So this makes me think that the dollar index is not yet complete when it comes to the bullish run. And while we're here again, I should mention that we have this massive candle here that we closed above off, which is basically in a way a breaker, because that's the high, a new low, then a higher high that was made. So this is basically a breaker. So I would only consider us truly bearish if we close below this breaker, which is basically saying closing below the swing low right there, or trading below the swing low right there. But yeah, if we close below the swing low, then I can consider us being bearish. But right now we are still in this bullish breaker, the last up close candle before the raid of the sell side liquidity. So just something to note before we continue. So let's move on to the currencies now, starting with AUDUSD. On AUDUSD, from the daily time frame, you'd remember that I wanted the opposite to happen. I wanted to see the 40 days low swept before looking for any bullish prices. If you've watched my IPDA Data Range video, you would know that yes, sometimes we do get a continuation pattern where price just continues higher from the discount. So say you missed the discount level, price has swept liquidity, and we've got a market structure shift, and now we're trading higher like we do right now. We can get a continuation from this fair value gap right here. But if you are waiting for the most ideal situation, you might not want to even be trading this right now. You would rather wait for price to trade below the EQ line, because only levels below the equilibrium can be considered discount for you to be looking for buying opportunities. And I never got that buying opportunity when we traded below the EQ line right here. I did not see any possible PDA rate that I could use to buy AUDUSD. So yes, right now it's showing signs of bullish price action. We got a fair value gap that broke a previous swing high, which is the 1st of April, and we might see a continuation higher from here, from this fair value gap. So I'm not saying that this is not possible. I'm saying I would not like that to be the case. Either way, in the week we have CPI on Wednesday. So CPI Wednesday will be the one to decide for me whether we are going to remain bullish or if we're going to go for sell side raid before continuing bullish. Obviously, I'm preferring to see a 40 days low sweep before looking for bullish price action. I would literally look for blind entries below the 40 days low inside of this fair value gap somewhere. So that's my view and my insight on AUDUSD. Next up, we have Euro Dollar. On Euro, we have the exact same structure as the dollar index. The difference is that we actually tapped the opening price. Looking up there, we have the open, high, low, close. The opening price for this candle is 1.07914, and we can see that the low of this candle is 1.07915. So 1 pip above, literally 1 point, not even 1 pip, 1 point above the opening price of the month. That's as accurate as I can think of it. So if you were to ask me now whether or not euro is bullish or bearish, I would say we're bullish. I would say we have tapped into this unicorn setup, which is the fair value gap combined with a bullish order block. In other words, this is a unicorn setup that could possibly take price higher to the 1.1 level that we were looking for last month, that we never got. So this is one clean setup that I could take anytime, any day. But again, looking at the dollar index, I would have preferred us taking the previous IPDA highs and lows. Well, in this case, lows. In the dollar index case, I mean, I want to see the highest taken, but we never got that. So I'm looking to see how price reacts from this. If I'm looking for an entry within this fair value gap, this daily fair value gap, I would obviously be looking for a confirmation on the 1 hour chart. So on the 1 hour chart, on Friday we traded lower into this fair value gap, giving us a nice discount for the day and for the month, because we tapped into the EQ line. But now we would be waiting for a structure shift. A structure shift in my case would be a swing high getting invalidated. So if we close above this swing high, if we get a complete closure when price trades higher, close above the swing high, respecting this fair value gap on the 1 hour time frame, on the 1 hour time frame, then I could look for a possible retracement into a fair value gap or an order block or a breaker in this case, because we can get a breaker there, a breaker retest, then continuation higher. For me personally, I might not take this setup even when it forms, if it forms. But if it does form, I'll be looking to buy euro dollar. If it doesn't form, if price does in fact continue lower to take liquidity one more time, then I would look to buy below NFP's low. My only invalidation point here is this breaker, this bearish breaker, and you see the same on GBPUSD. So I'm paying careful attention to this bearish breaker, which was my initial entry, which is a possible area where price could trade into, then continue lower, because we have the same swing high. If price does not decide to close above it, we could trade towards this and then continue lower, because we still have this market maker sell model that we've highlighted on the previous video and on the live stream as well, that I was looking for. So we could still get a liquidity sweep there, then a continuation lower, which is a very big possibility. So that's something I'm paying attention to. The next one that I would like to see, the next dollar measure would be GBPUSD. So on GBPUSD we have the exact same structure. We've traded below the EQ into this, you could call it a breaker. We have this breaker here into this breaker that we have not invalidated yet. Price has not closed below it yet. So we traded below the EQ line, giving us discount again for the month into this fair value gap, and looking very bullish right now. The fact that we perfectly closed this fair value gap, the BPR, which is the CB here with the BC this side, perfectly closed it, and now rejecting aggressively away from it, makes me think that we are going to remain bullish. But I'm not a fan of the idea yet, because we still have liquidity resting below price right now. We have the 40 days low and we have those relative equal lows, which on a high time frame like the monthly chart, you would notice that we have a massive inefficiency residing here below price. So we got a liquidity sweep already at that high. The SMT divergence between GU and EU was created at that high. So I wanted to see a complete market maker sell model from an hourly perspective into this fair value gap. If NFP had run us down into this fair value gap already, then I would be confident wanting to buy GBPUSD or sell the dollar index. But I don't like that we have an inefficiency resting below price right now, because when we check on the 1 hour perspective, pretending NFP never happened, you would be able to agree with me that this is potentially a market maker sell model. We tapped into the daily fair value gap, the daily sell side imbalance, buy side inefficiency. I'm not going to zoom out and again, but you should be able to see it right there. This tiny fair value gap there. I know it looks small here, but the fact that we respected it, almost perfectly filling it, was a strong indication for possible lower prices. We have a beautiful looking market maker sell model with relative equal lows there. Another 2 lows where we are just about a pip apart, a point apart between that low and that low there. So we have this beautiful looking market maker sell model, initial consolidation, expansion, and now we got the smart money reversals. So I personally took an entry with this breaker when we came back and retested it at that point right there. I jumped in an entry there to sell it off, and I was looking for a confirmation within this area. So when price was printing out, I was paying attention to this order block, this bearish order block before NFP. So right now we have if this is our low risk sell, this would be our first stage redistribution. So this is the point where I would be looking for high probability fair value gaps and order blocks. At the 25 and 50% levels, I'll be looking for those high probability order blocks especially, and fair value gaps, as I've already said. So here we have our bearish order block, and one thing that I like to do with my market maker models that I've learned from somebody else is grading my market maker models. So we have the low of the initial consolidation, and we have the high where we think smart money reversals are going to happen. We grade it and divide it by 4 quarters. So in my case, I'm using a Fibonacci tool to do exactly that, but you can do it with whatever you want to do. You can do it a Gann box or whatever tool you have in your arsenal. So here at the 25%, I don't think it's coincidence that we tapped exactly at this breaker and rejected aggressively without even reaching the fair value gap residing above price. This indicated to me that we are extremely weak on GBPUSD, and if you're looking for sales, this would be your best bet. So I was looking at this 50% as well to see and make sure that we get a closure below it, because if we get a closure below the 50% level, it gives me the confidence that we are probably going to reach the 75. And when we get a closure below the 75, this is the second stage redistribution. This is where Michael or ICT looks for his entries to take it lower to the equal lows or the initial consolidation lows, because that's usually the quickest run on liquidity from the second stage of redistribution or reaccumulation, whichever one, whether you're buying or selling. So at this point before NFP, I was looking at this order block, and we can see price trades and continues playing around the fair value gap and eventually hits the order block. So I wanted to see a distribution lower now from here. If I had a setup, I would be selling right now with my stop loss being at the high of this order block. I did not want to see us test this fair value gap anymore, because we already have a small fair value gap right here that was respected with the breaker that we have up there, and I wanted to see a displacement below from here during NFP, and we can see price trades higher into the order block. We did not invalidate the order block yet. We still kept the order block high. And one thing to keep in mind is that at this point we had an SMT with euro dollar. Let's see if we can go to euro dollar, keeping in mind that we have that high right there. We can see on euro dollar we got an SMT divergence because this is Asia session high, and we swept the high, giving me the confidence that I wouldn't like to see GBPUSD sweep the high as well. So I was paying careful attention to those highs that we have there, and we can see price displaced lower below the 50%. So at this point I got the confidence that we are probably going to run the 75 and eventually the initial consolidation lows. So I was now looking for a fair value gap to be created within this space. We've tagged the 75%. We got the fair value gap now. At this point I wanted to see this act as a high probability fair value gap, but one thing that I mentioned is that I also like to see a high probability order block form around the 50% mark. And right here we have one. We have a high probability order block residing at that area. So I wanted to see if price could come back into this area, into this level, the premium side of the range, and continue lower. I was tape reading this after NFP to see if I could add more orders, more entries to my main idea, because remember I had one entry up there. I was looking for another entry here to continue lower, with my stop loss in this case being at this high, the London session high that was swept. I left my stop loss there. For those that are unclear where I'm talking about there. So I set a pending order for an entry at the order block, stop loss there, because liquidity has been swept already and I don't see why we need to sweep with liquidity one more time. So I was targeting the initial consolidation lows, but I did not increase my risk in this second entry. It was just a very tiny entry actually. So price continued printing. We traded up into the fair value gap. We rejected for a bit and then continued higher one more time. Now trading and approaching this order block. The next candle came and we actually touched the order block. Again, we touched it and rejected away from it, which gave me the indication that we might be going lower. But I did not like the fact that we have now closed above this fair value gap. So this was the time I told myself to kill the trade, and I killed it with a tiny loss. I believe a 0.25% loss, and left it be. And when I came back to my chart later on, I saw that price eventually traded to where my stop loss was initially, creating basically equal highs at my stop loss area. So yeah, I did not like this move that we had on NFP, but if we somehow just ignored the fact that NFP happened, we could possibly see a continuation of this beautiful looking market maker sell model. It's still what I would like to see happen even now, even though we have rejected off of the 75% aggressively and continued higher. What I'm thinking, or what I'm believing would happen, which is what I said already for euro dollar, is I would be paying attention to this breaker. Again, we may get a liquidity sweep of these highs. We may get a liquidity sweep of Friday's high, trading into this breaker, then continuing lower. Personally, I will give it a try. So this fair value gap that was left open might actually now be respected. We might see a respect of this fair value gap. We might see a continuation lower, and then a final distribution to the sell side during CPI on Wednesday. So we might get something like this for Wednesday, or when CPI data gets released. So something to keep an eye out on. I say this is what the short, because the risk reward is I believe above 3 to 1, because my entry would be at the sweep of this liquidity, actually a test of this fair value gap. Then the stop loss is at the high from Thursday, targeting the initial consolidation low residing at that point. So that makes it a solid 3.5 risk reward there. 3.5 reward for $1 risk or 1% risk. So this is what I'm looking for as a possibility going into next week. If CPI does not run the sell side liquidity there and CPI continues higher, for example, we get a closure above this high or a closure above the breaker. If and when we get a closure above this bearish breaker, then I might consider bullish prices from there, which would give a confirmation at some point before Wednesday or after Wednesday. So something to keep an eye out on. But personally, I'm still bearish on GBPUSD because I don't like those equal lows, and I already mentioned my view from the monthly perspective, having a massive fair value gap residing at that level, while residing at that level there. So I would like to see this area tagged before we continue higher. The last one on the dollar majors that I'm paying attention to would be NZDUSD. We basically have the exact same setup as AUDUSD, well, similar setups. We have the 60 days lows, 40 days low, and 20 days low. So the whole month of March we're raiding sell side liquidities, and now for the first time in a while we've gotten a shift in structure, a swing high broken by a fair value gap, and we may just see a continuation higher. So what I'm foreseeing happen, if the dollar is to trade higher first before continuing lower. What I'm thinking might happen here is we might either come to this sell side, which is Friday's low. We might trade lower into it, tagging the body of this order block, this bullish order block, somewhere at that point, then continuing higher, eventually aiming for those relative equal highs at the 40 days and 20 days high, these relative equal highs here. Then of course, going through that, we have the 60 days highs and the previous buy side liquidity levels. So this is what I'm expecting to happen. If this doesn't happen, then we may trade to the 20 days low before getting that shift in structure. Of course, NZDUSD has been extremely bearish. That seeing the 20 days low getting swept wouldn't be a surprise, but personally I would rather see the Friday sell side liquidity swept before we continue higher, instead of the 20 days low or sell side liquidity there. So that's my view and what I would like to see on the dollar with the dollar majors. Going into next week, I'll probably be paying attention to GBPUSD or euro dollar, depending on whether we are bullish or bearish. I'll pick the stronger one or the weaker one in terms of strength. Then the other ones that I might be focusing on going into next week is EURJPY and GBPJPY. On EURJPY, we have from the, I think the weekly chart, the weekly time frame, we traded down into this fair value gap here from the weekly perspective last week, and this fair value gap was coupled with the bullish order block residing at that point. And at the highs, we have this buy side liquidity residing there. So I believe, or I would like to see a internal range liquidity to external range liquidity pool kind of move. Right now, we have rejected from the daily, weekly fair value gap, and would like to see the buy side liquidity swept now. So if we are looking at a weekly PDRA, our confirmation time frame would be on the 4-hour. So on the 4-hour chart, when we tagged into this level, we actually got the shifting structure a long time ago at that point when price closed above that high right there. So we got our market structure shift at that point. We got price trading down back into, I believe, short-term premium. Let's measure the range from the low to the high, and we see price trades down into short-term discount at this, into this fair value gap here. So now that price has rejected from this area into discount, respecting bullish PDR arrays from these discounted levels, we now expect, well, I at least would now expect to see a continuation to the upside. Short-term discount, expansion higher, short-term discount, and continuing higher. So I'd like to see a continuation till those highs there at the buy side liquidity. Of course, this is a 4-hour chart. So the time we traded into this short-term discount here, I would have been shifting down to my 15 minutes chart for a confirmation. And we can see that we also got that as well, because price traded there, traded higher. We got a closure above swing highs. We got multiple closures actually. For example, right here, we have the swing high there. We got a candle closing above it. And we have a fair value gap there. So for me, this would have been my entry. I would not have liked the fact that we closed below these swing lows, but we did trade into this other fair value gap, the lower one. So I might have still held it, and obviously my stop loss would have been at the swing low there. So we can see a continuation, rejection, back down into discount, continuation. So I would like to see price continue the bullish trend to the upside, probably using the 1-hour time frame. So right now we are currently in a fair value gap over there. So I'd like to see us tap into it and continue higher. We also have the same structure or similar structure on the daily. Remember that we did the highlights from the weekly time frame where we got internal range liquidity. Let's go back again. We got internal range liquidity and we're expecting external range liquidity. On the daily, we got the exact same thing, internal range liquidity to external range liquidity, which is this swing high. But obviously, ultimately, we're aiming for that swing high there. So on the daily time frame, we got this. If we are looking for a confirmation here, we would like to see an hourly shift. On the hourly, we got exactly that. This is the time we tapped into the daily BC. We got our hourly shift when we closed above a swing high. The swing high that I can identify easily is this one. We got a closure above it, and we got a test into this fair value gap below it as well. So right here might have been your entry. If you did not want an extreme discount, you might have tried this entry as well, with your stop loss being at this swing low, hopefully. So right now we are currently in a fair value gap as well, a massive one, but we are there, and we might look to see if price could continue higher from this fair value gap without retesting. If price does decide to retest, if price decides to go lower, then I would have my fair value gap drawn out like this. Let's identify that as a buy side imbalance, sell side inefficiency. So we might see price trade lower into this swing low, taking out the swing low sell side liquidity into the consequent encroachments of the BC, then continuing higher. But personally, I would like to see price going higher. If we want to grade the move as a market maker buy model, even though it's not necessarily one, I would have my Fibonacci like that and enable my 25% areas, and we can see that we just need a high probability order block within the 50%. Notice how price is already reacting from the 50% mark, and we have a fair value gap but not an order block. If you want, you could consider this to be our high probability order block. We have a series of down close candles within this area. We could also consider this one to be our order block as well, all around the 50% mark. So basically everything inside of this BC can be considered an opportunity to take price higher. So something to keep an eye out on going into next week. EURJPY. Then we also have GBPJPY, which is basically a clone of EURJPY. I did want to see if we have an SMT divergence between the two at any point, but I could not identify one. So it's not the highest probability setup for me, because I like and I prefer to see an SMT somewhere. We didn't get that, but we might get that somewhere in the week, next week. This week we're going into it. On GBPJPY, we have this buy side liquidity. When you zoom out, I know I could go to a monthly chart or any other higher time frame, but I think the weekly is fine. So we have that buy side liquidity residing there as my longer term target. On GJ, we have a retest of this buy side imbalance. We traded down again into this bullish order block, and now we have created a fair value gap from a weekly perspective, an external range liquidity to internal range liquidity. So last week we did complete exactly that. We traded from external back into internal, and now we are internal going back again into external. So I'd like to see price come back to this, and going through that we have this buy side liquidity from, I don't know what year, but we are expected to come back into this high. So now that we've retested a weekly PDRA, let's see if we have the exact same setup on a daily, and we do, as EURJPY. So on the daily chart we also have the same idea going on there, a daily fair value gap. Look for an hourly confirmation within that fair value gap, and we got that when we closed above this swing high, the same swing high as EURJPY. So now I would like to see a continuation higher. On GJ, we don't have a retest yet into this fair value gap, so I guess in a way we do have an SMT divergence already. If you remember, EURJPY has already tagged into this, but GJ has not. So we might look to see if GJ decides to tag into this, EJ might trade lower into some sort of significant liquidity during one of the sessions in the week, then continue higher. But this is something to keep an eye out on going into next week. I'm looking for buying opportunities within this fair value gap, going into that buy side liquidity, and ultimately all the way here if you want to swing it. So but short term we're looking for that buy side there. If we want to grade the entire move from the relative equal highs as our initial consolidation, starting from the smart money reversal, we can see the 25% aligns perfectly to where price is now reacting from. We are approaching the 50%, so we need to see a closure above the 50% to solidify our bias going into the buy side there. Of course, we got that here already, but price fell off aggressively on Thursday. So we're looking for this inefficiency to be closed and invalidated, so we can confirm our bullish bias on GBPJPY. So I'll set an alert at that point, and I'll set an alert on EURJPY as well at that point. So that's what I'm looking for on EJ and GJ going into next week. The next one that I have on my crosshairs is, I believe, EURCAD. We got EURCAD and GBPCAD. A perfect market maker buy model once more, just like GBPUSD. Initial consolidation, smart money starts taking price lower, and we got a reversal there, a smart money reversal from a higher time frame PDRE, which was a BC actually. Now on the 25%, we can see price perfectly tagging it multiple times, which is this fair value gap, and now we got a rejection away from that. At the 50%, we would like to see high probability order block, and we got that. Actually, this is cleaner on the 4 hour, but on the 4 hour, price only tagged into this fair value gap by 1 point. The 25% fair value gap, which is our smart money reversal, but we should keep in mind that we have this breaker that price gave us multiple opportunities to enter. Well, 2, 3, 4 hour candle opportunities to take in, to jump in a trade and take price higher. We have those perfectly equal highs there, and when you zoom out even more, there as well, there's a swing high right there. You check the levels yourself, you notice that they're exactly the same high, except for this one being slightly lower than the other two. So we got an entry here at 25%, a 50% fair value gap at this point on Friday. We got a retest into it. Well, this was actually on Thursday, 1 a.m. continued higher. I personally now at this point wanted to see a retest of this order block, because if you remember, we typically see a high probability order block within the 50%. So I wanted to see if price could come back into this area, because we have the fair value gap residing there as well, but we did not get that on Friday. We only traded lower, sweeping London session low, I believe, at that point, to sweep those lows, yeah, from New York AM session. We swept the lows, these two lows, and continued higher during NFP. So now going into next week, I don't know if price is going to come back into this area, but I don't think it will, considering that we have now closed above the 75% retracement. So this, as you remember, is the final stage redistribution. This is when price runs the quickest. So I'm expecting price to tap into this 4 hour fair value gap. You could look for a 15 minutes confirmation, or you could just blindly take this fair value gap, predicting that it would go higher into the equal highs up there. So this is EURCAD, the exact same setup on GBPCAD, with the difference being that on GBPCAD, I'm only aiming for these relative equal highs up here, and I'm not looking for anything further, because on the higher time frame, it's a weekly internal range liquidity. So it's a weekly fair value gap, and anything can happen inside of this fair value gap that could maybe take price back again to external range liquidity. So we don't want to keep playing after prices reach the high time frame PDRE, unless of course we see an invalidation of this CB, like a closure above it, then we could continue to the external range liquidity up there. So personally, that's why I don't want to take it further than these highs, than those relative equal highs from the 4 hour or the 1 hour time frame. So the same idea, I just don't know where you'd get an entry, probably using this fair value gap during a kill zone. If it gives it, then you could possibly look for higher prices. But the exact same setup, we got an ugly looking smart money reversal, and we got a retest inside of this, finding support, continuation of the support by having an institutional order flow entry drill, and now we have just created this fair value gap. So we would like to see how much price respects this fair value gap, if it does without reaching the target. But this is what I'm looking for on GBPCAD. As we conclude, I would like to also cover the indices as well. So let's start off with RTY, which is Russell, from the daily time frame. From the daily, we can see that order flow is currently bearish, but of course anything is possible, and we could still continue going for higher prices, targeting this buy side liquidity, all-time highs, and continuation higher. So something to keep an eye out on. That yes, we are looking bearish when you just focus on this portion of price action, because firstly we got a closure below swing lows there. A market structure shift can give you the idea that we're probably gonna go lower. We respected this fair value gap. If you want to be more specific, we respected this inversion fair value gap, which was a PPR. So price traded up into it on Thursday, then aggressively fell off to the downside. On Friday, we failed to take out the previous day high, which might not even be reached. We have this order block here, this bearish order block, that could be used or respected for lower prices. So right now, if we are bearish, then obviously we would like to see if previous swing lows can be taken, like the sell side liquidity there and the sell side liquidity there. So this is what I'm looking for going into next week. When you zoom down from the daily to the hourly, considering that we're looking at that bearish PD array, we can see that Thursday's high to low is from here to there. So we got this high to this low, enabling just the 50%. We can see that price traded into round about the 50%, round about the middle point of the previous day's range during NFP, and price may respect it to continue lower. So right now we are at that daily order block line, which is this blue line here. So I'm expecting to see if this hourly order block can also hold for lower prices, because we can see it perfectly aligns with the daily one as well. So if you want to attempt this on market open, you could. We could see a price respecting this and continuing lower, because when we got a closer below it, I would have been in at this point with my stop loss being at this high, but I don't know if I would be confident holding it over the weekend. Of course, as I said, sell side liquidity target at that point and another sell side liquidity down there. So that's something to keep an eye out on. If I'm bullish on the dollar, I'm bearish on the indices. Moving on to E-mini S&P 500. We have a similar setup from the daily time frame. I'm not going to look at the weekly right now because it's not the cleanest yet. So on the daily time frame, we got a sweeping liquidity at the highs up there. We got a market structure shift here. We did not get the fair value gap that I would have liked to see on the daily, but we still do have this order block residing right here. Actually, let's use a shape right there. We still have this bearish order block residing right there. So price may respect this order block and push lower into this inefficiency here, the volume imbalance, and specifically the sell side liquidity that's around the inefficiency. So I'm expecting price to trade lower into this area and below it. Closing below this, then we may see a continuation lower to the other sell side liquidity residing there and there. But it's something to keep an eye out on next week, especially considering that we have CPI on Wednesday. So we should get some level of volatility and liquidity injection in these markets. So personally, again, I'm looking for a continuation lower of this bearish trend. I've already pointed out what the 1 hour looks like on Russell, but we'll do the same here. Measuring the range from Thursday, from the low to the high, we can see that we've traded into short-term premium into this massive inefficiency. We got a displacement at 1 p.m. after lunch, and we have this bearish order block right here. So I would like to see how price reacts from this bearish order block residing here, especially. So but if we do get an SMT, if say for example we sweep the high of this order block, which is the high of Friday, if somehow we sweep the high of Friday and continue lower, I would like to see some sort of SMT divergence, meaning that I would like to see the high on one of the indices be swept while the other one doesn't. So one of the three majors, ES, YM, or NQ, but primarily ES and NQ. So if NQ can keep the lows while ES sweeps the high of Friday, then I'll definitely be looking to sell NQ. I don't have to zoom out again because it's the exact same thing, but for those that want to see for completion's sake, we can go zoom out on the daily chart and we see we have the exact same order block. So I'm looking for this sell side liquidity. Going through that, we have multiple sell side targets that we could aim for. So that's what I'm looking for. Of course, as I already mentioned, NFP didn't really do much to tell me where price is likely to go to this coming week, but hopefully CPI will be able to clear up everything and we would see the volatility and clear direction that we are looking for. So this is my look on the market. That's all for now. If you have any questions, please do not forget to ask in the comments below. If you have any suggestions, if you have any inputs, anything at all, I'm open to every and any messages you have for me. But if that's all, then stay safe, good luck, I wish you the best, and good trading.